Hello, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, February 27th, 2026. Ron Quaranta here with my amazing co-host, the one, the only Joshua Ashley Klayman, and our old friend and special guest, the one, the only Adam Goldberg, Product Counsel for Crypto at Figure. David Brill couldn't join us, everyone. He's on the Gulf Stream heading somewhere, Josh. I'm not sure where. But before we begin, for everyone in the audience, thank you so much, LinkedIn Live and YouTube and X, who are watching us. If you've got comments or questions, please put them in the chat, and Adam and Josh and I will try to address them as quickly as possible. And our usual disclaimers before we begin. Obviously, nothing we're discussing should be considered any kind of legal, investment, or accounting advice. And what we really talk about are our own personal opinions, not necessarily the opinions of our respective firms. Adam, thanks for being here, buddy. It's been a crazy week.
Yes, very much so. But I guess kind of, I'm sure, typical for crypto. But
yeah, a typical week. I'm tired already, Josh, and we're only 2 months into the year. I guess let's kick off with something, Adam, that since we've got you, Josh, you chair our legal working group. You really focus on a lot of the stuff that's happening. And Adam, more often than not, when we're at a legal working group meeting, I'll say, Adam, give us a policy update. So Adam, I'm going to do that to you again today. A lot of the talk we have in the industry is, where is clarity? I think there's a lot of noise versus the signal coming out of DC, particularly the way the media portrays some of this. So market structure is still a bit out of reach. Can you tell us why?
Well, I think there's still not an agreement kind of on the core issues you need to agree on. I think there is quiet progress being made, which is what people would tell you. I know this week, many of the industry organizations organized like a DeFi fly-in.
Yeah.
I found out, I think probably everyone publicly found out on our earnings call yesterday that my founder, Mike Cagney, was at the White House yesterday. So I think that likely had to do with DeFi week and everyone, like all the significant participants in DeFi trying to come together and make progress on these kind of logjam issues that we've had on the way to potentially getting a market structure reform bill. I guess the reason to be hopeful is that everyone's still at the table, still trying to work on it. Yeah. No one has walked away. No one has said it's dead. If you hear some people, especially from the administration, they still seem very confident that they're going to get something potentially by the end of this month or early April. Again, I as we've discussed in previous times, I always look for like the actual guideposts, which are committee markups, released legislative text. Like that's what we'll actually need to see in practice. But as far as I know, at least some of the outstanding issues from the public reports have at least been definitively decided one way or the other. It seems like passive yield on stable coins is kind of a dead issue. It's not. That's something the crypto industry is not going to get out of market structure. But I think they're still trying to figure out exactly what that compromise is on stablecoin yield.
Yeah.
And I think we saw some notable developments yesterday with the OCC releasing guidance as to what would qualify for a Genius Act compliant stablecoin program, especially for a foreign issuer. Yeah. And some of these assumptions people may have had about the way you could set up an affiliate program to give the same kind of rewards may not actually be on the table if you believe some of the guidance that's been produced.
Adam, thanks so much. And Josh, I want to pull you into this as well, because one of the things we've been talking about for the past several weeks, and Adam, Josh, tell me if you see it differently. It feels like, and I'm just going to say it, it's going to be more provocative, Adam, than I mean it to be, that the politics of a market structure bill is beginning to fade away. We've brought up there's the ethics angle of some of the things that people in Congress are very, very, seemingly very upset about. Has that been pushed aside for the sake of putting forward some kind of legislation?
Well, I'll let Josh answer if she wants, but I would just say on that front, I've always thought that if they would get past the ethics issue, if they wanted to get to a bill, it's just whether or not like that is the outcome. If you actually want a piece of legislation, you're going to have to give up some of your sacred cows and actually pass something.
Right. Josh, do you see it the same way? Am I seeing it the way you're seeing it?
I mean, I think that's right. And certainly, I also, for our viewers, I am not in a cave. I'm in a well-lit room. I don't know what's going on. But but yeah, I mean, I agree with Adam, although I must say this is Adam's forte and not mine, the whole, political or Washington guru piece of it. I would say that. There's probably a better way to explain it than I just did. But yeah, I mean, I think at a certain point, the political is always going to be there, right? Because this is, people are thinking about their individual futures as well as industry futures. But yes, it does seem at least there's still movement. At least people are still at the table. So
yeah. Josh, go ahead. I'm sorry.
I was going to say, with respect to the OCC request for comment about the proposed rules, that was such a comprehensive set of proposed rules. I think many in the industry, at least many lawyers, were not expecting something to be covering so much ground. Even the definitional section was pretty robust, to say the least. And I do wonder, although, greater minds than mine, I'm sure, have thought this through, just how much this release of these rules now, while we're still having this market structure discussion, some of which affects Genius or could be affected by Genius, how much of this is, pushing things forward in a way to get momentum and maybe stop some of the countervailing arguments that are still being discussed. I'd love to know your thoughts about that.
Josh, I think that's a good point. And Adam, it brings me to the next thing I wanted to add, because in my mind, it is another, I haven't fully gone through the OCC notice of proposed rulemaking. Josh, candidly, I'm dreading putting together another response because it's like herding 40 different cats, and all of them are brilliant cats within the WSBA legal working group. But, Adam, one of the perspectives I've often had is, in the absence of market structure, regulatory bodies are doing what they can to create structure insofar as their powers allow them to do that, to enable the market to move forward in a compliant way. When you look at what the OCC's put forward as a notice of proposed rulemaking, is that a logical assessment?
I mean, I thought so. I mean, I saw two takes on it. So obviously there was like the Pollyannish take that, oh my God, they're trying to kill stablecoin yield. You saw that going around Twitter, and a lot of people getting very up in arms about it. Yep. And then you had some more measured point of views where, like, you had some lawyers that are like, well, if you read the Genius Act, this is exactly what it said. And it's just they're taking the law to its logical conclusion. Maybe you had hoped you'd sneak a loophole in here or there with an affiliate program or something. I think really the impact, at least when I looked at it and I read through it, the biggest impact I saw was kind of for the foreign issuers. And obviously, as we know, the largest stable coin in the world is USDT, which is a foreign reserve. It's not a Genius Act compliant stable coin. Obviously, they hired the former White House head of the crypto task force to launch the USDT version of, like, a US version compliant stablecoin for Tether. But that was one thing that people really did point out, is that if you were really hoping that you issued a stablecoin in a foreign jurisdiction and then you had a US affiliate or another affiliate abroad that could have some kind of rewards program for using that, which I think people had assumed was going to be an avenue, at least for me, that kind of it. And again, it was just it's just a note. It was essentially it's a potential rule. They won't comment on it.
It's proposed rulemaking. It
can change. Yeah, I just want to be clear. It still can change. Still can go through notice and comment. But based on what they said, that would be prohibited. And they were really like, you need to go through the front door and do all the things you're going to need to do to be a Genius Act compliant stable coin just to get through the door. And then once you're through the door, we're not going to allow all these off ramps to get around the yield prohibition. So I think the industry will need to work through that. I don't think it's the end of the world, but how it impacts the policymaking, I think the Trump administration has been very clear. They're going to go forward no matter what. They very much would like a bill and seem they're putting their political capital behind the bill. I think it also should be noted that the volatility in the market, and especially the volatility.
Oh, we're going to get to that.
The volatility in some of the president's personal crypto businesses. If you read some things about American Bitcoin mining and American Bitcoin and some of their other portfolio companies, or as many are in the sector, are not doing great right now. it is very much seen if they were able to get market structure, that would be a big catalyst and a big boon for the industry, at least from an asset appreciation point of view.
Yeah.
So at some point, there are like sacred cows that you have when Bitcoin's 100 and your stock's doing great and everyone's making a ton of money. And then there's stuff you're willing to compromise on when Bitcoin's at 65 and the valuations of companies have been cut in half or even way more than half, if you believe some of the reports.
Adam, thanks so much. I'm going to segue for a split second. Josh, remind me, I think this is Adam's at least second time as a guest on the Crypto Roundup. I am now obliged to make sure you get some WSBA swag, Adam. So the cup is forthcoming to your home. Put in it what you will, preferred drink of the day. Adam, Josh, when we continue to talk about market structure, and I'm with you on some of the turmoil, given some of the political ramifications of this, I do want to add back a part of the conversation that I think has kind of faded away a little bit, and it really is this banks pushing against market structure, and it is some of the, I'm going to call it contention between, call them the largest banks and the large bank trade associations, and the newcomers in this space, the large exchanges, for example, that seems to have fizzled out as a this is why market structure is not moving forward. Adam, am I overreading that as well? And Josh, obviously we talk about this every week. Would love your thoughts on that.
Yeah, I don't know if you're overreading it, because I think at the end of the day, the banks definitely don't want any kind of passive stablecoin yields if they can avoid it, especially on USDC, which they probably see as the biggest threat. And obviously that's almost existential to Coinbase's business model. They own almost half of Circle. They pay a ton of USDC rewards. The number one benefit essentially you got from being a Coinbase One member is the yields you can get in the form of stablecoin rewards. So this was always why market structure was going to be harder than Genius's, because you have entrenched counterparties and someone's going to lose. And these people are not used to losing. Crypto won kind of everything in the last election, and they're used to winning recently. And the banks typically always get what they want out of Washington. So it's like you're dealing with two different interest groups that are very used to winning.
But Adam, I want to be clear there, and Josh, cut me off if you've got something smarter to say than I do, which is usually the case. But I guess, Adam, the question I've got is, lose the battle over market share for products and services offered, or lose the battle of politics in Washington?
Well, I was going to say in Washington. I mean, the banks are relatively undefeated. Dodd-Frank, a couple examples, but even then, they get to repeal some of those rules years later. They play a very long game, so even if there's a rule of law, they'll come back and try to sneak a medium-sized SIFI exemption in and get everyone under 100 billion exempt, and they'll do that years later and get it bipartisan. Because the crypto industry is more tech focused, they're used to moving faster and breaking things. Not always the way it works in Washington, but again, they did very well last cycle. So it's sometimes hard to tell people that have won or are used to it that they might not on something, or they might have to compromise, or they might have to really do something potentially painful, maybe short term for their business, that might be really good for their business long term, or really good for the industry long term. Because as we know, sometimes the original winners in something are not the eventual winners. They're the incumbents, and they may lose.
Josh, please. Adam, thanks so much. Josh, weigh in, please.
So I think one of the things, and I'm not going to tread on the same things that Adam mentioned, because I think he said it very well, and I can't say it better. What I would say, though, is when I think back to some of the other discussions that have been had in the relatively recent past, not the immediate recent past, but about what China has done with the yuan, right? And allowing commercial banks to offer interest. I mean, is that just forever off the table, or at least for the time being? Like, do we think that if, for example, banks in the US, commercial banks, were allowed to offer yield or rewards or something like that on stable coins, do you think they would say, hey, yeah, we should all be able to do this? Or do you think it really is a, keep a good man down? Just kidding around. But you know what I'm saying? Like that, where it's more of a sword than just a shield for the banks.
I mean, I can let Ron answer, but the thing I would say is why that might be tough for the banks is, so let's say you're right. Like, why couldn't they offer a stablecoin and pay yield? Why would that be bad? Was, most of us have checking accounts.
100%. Yes.
or have a savings account at a half a bip of interest. If you're all of a sudden going to pay the interest USDC does, or for example, Figure, we have a yield-bearing stablecoin, and there is a path to do that if you register it as a security, which we did. But basically, we pay pretty much SOFR, which is like SOFR minus 50 bips, so around there. So minus 35 bips, but that's basically 3.5%. That would destroy the bank's fractional reserve banking model if they went from paying almost nothing on deposits and lending them to the Fed at the rate they can get for Fed funds. And then we're now doing 3.5% to 4%. So it is kind of existential for them because their model they built is reliant on basically a huge deposit base that they pay nothing on, that they earn interest, and that they lend out at a much higher rate. And that's how the whole thing functions. So it is a little bit existential. It's like you would be pulling out their core funding stream.
That
Adam,
makes sense. So even if they couldn't, I mean, even if they also could, they wouldn't want to, is what you're saying.
Yeah, I mean, if you're JP Morgan,
sorry, Ron,
$2 trillion balance sheet, just do the math. Pay 4% on $2 trillion out to your customers. That's a lot of money going out the door.
I am going to go and rip up the script and give you both my long-term prognostication on all of this. And you can both tell me I'm insane. Adam, for the record, David and Josh do that fairly regularly by text message. I think there's a long game here, Adam, as well. You know, there was increasing conversation about the dollar as a reserve currency and how that gets shored up over time globally because of dollar-denominated stablecoins, which, as I understand it, are by far and away the largest proportion of stablecoins in the world. And there is nothing that precludes global banks from partnering with some of these stablecoin providers in the future. And I think rather than becoming a zero-sum game, one of them has to lose, and going on the side of some people who say banks have got to go away, they're a terrible business model. It's not a totally terrible business model, and reserve banking is critical to the global economy. Banks will begin to partner on global stablecoin offerings. And banks have precedent for doing that. Tell me I'm wrong.
Well, I don't think you're wrong. I mean, I think one thing that you always, and you see it a lot when you have an emerging industry that's like part of a bigger industry, is like you have people that are upstarts that want to be changed and be disruptive. Sure. The incumbents don't go out of business overnight. I mean, their stock may stagnate. It may take 20 years of slow decline, but these are $1 billion of enterprises that may have trillions of dollars of investments over decades into them. They don't just go away. Yeah. So I think what you're seeing is a lot of the banks are adapting. I mean, many of the JP Morgan, for example, Standard Chartered, Santander, there's a lot of different people that are looking into how they could use both blockchain technology to move payments within their own closed ecosystem, but also how can they launch a Genius Act compliant stable coin, because there may be a use case within a giant financial institution that has a bunch of different business lines for that stable coin. Or as you say, they might partnership. I think Coinbase has done a lot of those partnership, I guess, negotiations on behalf of Circle, but like obviously they partnered with PNC and some of the other major banks. And I imagine a big part of that is integrating USDC for stablecoin payments and all different things they do from a custody side with it. So I think there will be a degree of collaboration and the industry taking this seriously. And I think you even heard JP Morgan talking about that. He's like, he used to like say Bitcoin was worthless, but now he will tell you that blockchain is going to be core to the future of JP Morgan, and it's going to be core to how they move money around the bank and how they do global remittances and how they do payroll and how they do payments. Yeah. So I do think we've come a long way on that front of the banks are no longer just like kind of sitting this one out. They're actively part of it now.
Yeah. Josh, go ahead.
Yeah. I mean, in my practice, as you guys know, I represent a number of banks in their crypto activities and financial market infrastructure activities. So they're definitely moving ahead on things, even with this crazy market that we're having right now. Like, I have not seen a slowdown in terms of projects. That's why I just think this idea that forever, no one would be able to pay yield, right? Yeah. Like forever, that forever feels like a long time. That's why I was trying to think of a world in which, like, maybe if the banks could do it, like there's some, just because, I mean, I guess what I'm wondering is there a scenario in which if other jurisdictions permit, yield on their stable coins. Somehow, does this change the dynamic of whose currency wins?
And that circled back to where we started with China. The hard part about anyone else doing it, so even China, obviously, they'll have a huge amount of people that use the digital yuan because they have billions, over a billion people in China, and they can force them to use it. And obviously, a lot of client states of China will use it as well. And obviously, there's reasons no Westerner would probably want to use it, which is the full surveillance element and the ability of the Chinese government to control your currency at any time. But I think the point about kind of the other stable coins is people want dollars. They don't want euros. They may want JMB slightly, but like they want dollars. That's just like that's what the market wants. So at the end of the day, like you can launch a European backed stable, no one will buy it. There's no liquidity in it. No one wants it. No one wants to use it.
Yeah.
Like, most of the providers have a European coin. USDC has USDC. No one uses it.
Yeah.
And I think even the European Union wants to launch, and I think has done initiatives to launch their own. And when they do, and if when, like they can force people to use it, but like you can't really force the market to use it. You can force people that interact with the government and people you have influence over. But at the end of the day, the market's going to make its determination of what it wants. And at least right now, the market wants dollar-denominated U.S. Treasury-backed stablecoins.
That being said, Adam, I will say a 50 basis point savings account still pisses me off to this day. I want to do a shout out to a couple of our friends. David Wysocki, shout out to old friend and member. He's co-chairs our tokenization working group. There may not be interest-bearing stablecoins, but there can be interest-bearing money market funds coming to retail. He references the Wisdom Tree example. It does the same thing. I would argue there are slight differences, and then he notes if they get distribution into the digital pipes. Adam, Josh, this is sort of, we brought up the money market fund conversation pretty frequently. How difficult is that migration to making these money market funds available that pay that level of interest?
Well, it all depends on structure, right? Because like you can create a tokenized money market fund, Ondo and a bunch of other people have, and Wisdom Tree is, and I believe Franklin Templeton has one, and it's getting easier. I mean, there was relief the other day where you can now do basically changes within the day rather than waiting for kind of the NAV at the end of the day, which was a huge holdback. That is obviously a big unlock. But it just really comes down to the structure. And I say this as someone like with personal experience because we have a yield-bearing stablecoin, which is a security, and money market funds very similar. You essentially like you have to register in this whole series of rules you have to follow for a money market fund, and how you handle redemptions, and how you print the shares, and how you do all these different things. So it's that tension because it's like we want to have a very simple instrument in our mind, which is just a stablecoin that pays yield, but you essentially have to jump through all these hoops because these are the regulated pathways that may be able to do it. And because of all the hoops you have to jump through, it kind of loses some of the utility from just the starting design of a coin that pays interest.
Yep, Adam, Josh, we've got a bunch of comments coming in. I want to skip one of the comments. I will get back to David Brill on the Gulf Stream, who's probably using Starlink. Larry Miller, old friend and WSBA member, one point I have not heard in the yield-bearing stablecoin discussion is that an alternative to stablecoins is deposit tokens. They're unique to banks and can be used only within banks, and they could pay interest. And as bank deposits, the capital banks can lend. Adam, it's a really good point because I feel like sometimes I go down this road. It's one or the other, and I think Larry's making a very wise point. Where does it necessarily need to be one or the other? There can be deposit tokens that yield some interest. There could be stable coins and stable tokens with a different use case.
Yeah, it could be. I mean, the funny thing that I actually found out after coming to Figure is before they landed on the design of YLDS as a face amount certificate, Mike Cagney tried to do that. He tried to go to a bunch of regional banks, and he formed a consortium, and they were going to do a tokenized bank deposit and bring it out to the market years ago.
Yeah.
And then the Biden OCC killed it, and they said, no, crypto is a threat to safety and soundness. We will not allow any of the banks to participate in this, and just basically shut it down. But now with a different administration, I don't see essentially why you couldn't. But then the only complication I would say about the tokenized bank deposit is now that you do have Genius and you do have all these rules around what is a stable coin and what does it need to be and what needs to back it. Now trying to fit in that tokenized deposit into that kind of smaller circle that's not a stable coin, that's not a security, that's not a tokenized money market fund it's a little narrower now than it was. Josh might be able to. She's probably much closer to that, but I would say it's a little harder now post Genius.
Yeah, I mean, I agree. I do think the fact that, I mean, luckily, and I'm sure it was negotiated this way, right? Luckily, Genius, as you guys know, does carve out tokenized deposits.
Right.
And there certainly is interest about tokenized deposits from various banks, including, frankly, banks all over the world want to understand what's possible in the US, including central banks from all over the world. But yeah, I mean, I think, yes, it is something that I'm sure people will be continuing to think about, but I mean, stable coins have captured the imagination and the enthusiasm of people in a way that I think, at least right now, tokenized deposits not so sexy as compared.
Fair point. Josh, Adam, thank you both. Larry, great question. Be warned, you'll probably have to discuss this even more at the upcoming legal working group meeting on Monday. Appreciate it, David. Appreciate it, Larry. Josh, I want to get to David Brill's comments. And Adam, this is what I get for not using David's question first. He sent me this text message earlier this morning from the Jet. Adam, what is the drop dead date on the calendar for getting clarity passed before midterm campaigning? We've had this conversation with the four of us many, many times. We've had it in our different working groups. I feel like that drop dead date keeps getting pushed. Adam, is that correct?
It will till there will. So you don't ever want to say anything's officially dead, but you really you can't leave it to the summer because we're already like primaries are happening. So like for example, Texas's primaries next week. You're going to have a huge amount of legislators and senators and congressmen running for different offices that might lose their seat in a primary challenge, and they might be a supporter or against it. Or so it really can kind of those primary dynamics can change the voting math. So but then at a certain point, they want to go home and campaign, and they don't want to come back and do any more legislating. They might do the core functions of keeping the government open. Obviously, that's not. They don't do even that anymore so much. Keeping the government over. I think we're still in a shutdown of DHS as far as I understand. Yeah. But yeah. Once you get to the summer and you kind of go, especially the August recess is like, the August recess is where things go to die. Like if you go home in August and you don't have a market structure bill, chances of it being resurrected before the fall campaign season are just like little to none. And then maybe there's a tiny window in the lame duck. Like if the only thing I would say on drop dead is there will be a drop dead once we go into the November elections.
Right.
There will be a period after the November elections, depending on the outcome of the November elections, where you could potentially get something. It's much harder, but it could happen.
But Adam, I'm going to put on the rose-colored glasses a bit about the willingness of Congress to move this forward, simply because a month or two ago, the 3 or 4 of us and several others in the WSBA were talking about the fact that if it's not done by February, it's never going to get done. I mean, Josh, you and I specifically had those conversations. So I again, I don't mean it to be rose-colored glasses, Adam, but I do suspect there's a bit of an impetus to get this done on both sides of the aisle.
I would think so. I would think if you wanted a bill, you really want to see that legislative action in March. Worst case, vote on it in early April. As you just, because Texas is an early primary, but we're going to have 50 state primaries that will go through as we get to the beginning of the summer. And then once those primaries are decided, all of those people that won their primaries are going to want to go campaign. So there's a time and a place for legislating, and if you miss the time and a place, you could have a very hard time kind of putting it back together.
Go ahead, Josh.
Yeah, I was just going to say, also, when we look at the composition of the Senate, and we know, for example, that Senator Lummis, I believe next year will be
she's leaving.
stepping. Yes, exactly. And the person who she's kind of tapped as a successor, right, is not necessarily focused on digital assets. I mean, certainly, I'm sure she's trying to get up to speed, but my understanding from those who are a bit closer is that she's very focused on environmental issues. And if this is untrue, I take it all back, but that she's not, that digital assets is not something that she is particularly focused on or hasn't traditionally been focused on. I have heard, however, that she is has been quite aligned with the presidential administration generally. So maybe that is something where, support still will be there. But I think the voice that we've been counting on from Senator Lummis for a long time. I think that when she is not there, they'll hopefully others will step forward. But she is a powerful supporter and very a very important voice for the industry. So hopefully we get something done while she's still here.
And arguably, Congress has a lot of other considerations besides
100%.
additional. I mean, there's geopolitical concerns, there's tariff concerns, it's a messy world.
But still, I think we need to be honest. Like, this is the least productive Congress I think we've ever had. So they're not doing much. I think the Senate is going to put a housing bill on the floor, I believe, that's not going to go anywhere. It's likely going to die in the Senate. The House obviously can pass things that go to the Senate and just die, like the Voting Reform Act they just tried to pass. So it's like, if they're going to do anything, this might be one of the few things they do that has bipartisan support, because, again, they're not super busy at the moment.
Yeah, Adam, Josh, appreciate it. Go ahead, Josh.
I just wanted to mention, because on a lot of our prior calls, we've been talking about, so-and-so missed earnings. Other people did, gloom and doom, whatever.
He's going there.
But I just wanted to mention, like, among other things, as we know, like Circle had its earnings, right, and did exceptionally well. And my understanding is that they significantly beat estimates by analysts. So I think that is, it's right on point with what we were talking about.
It's funny because, like, the information is on chain, so it's like you couldn't win this. You checked their balance and see how they were doing. It's kind of funny.
And arguably, a well-run, well-structured stablecoin business is a pretty damn good money-making business, all things considered. Adam, Josh, we've only got a few minutes left, and I want to segue a little bit. David probably sipping a martini at 35,000 feet. Josh, Adam, I've got to throw it out there. We have a new rule that I want to bring up. I call it the Brill travel rule. When David Brill travels, Josh, Bitcoin loses somewhere between 1% to 2% within less than 24 hours. David, we love you, buddy. You're never allowed to travel again. But I've got to pivot us to markets. And Adam, Josh, would love your perspectives. One of the excuses, Adam, that a lot of people have brought up is kind of geopolitical chaos. A lot of it is, crypto market prices aren't keeping up with what we thought they would be doing because there's no market structure. I don't think that's the argument. I think as a more comprehensive or pervasive series of assets with deep institutional exposure, they're more subject to macroeconomic issues. Adam, Josh, is that an oversimplification?
I don't think you're oversimplifying. I think, so for example, Josh was saying Circle did great, right? NVIDIA, as far as I understand it, the day before yesterday, reported arguably the greatest quarter in corporate history, as far as I understand. I think they made $70 billion in the quarter and then raised their guidance. And I think
in a quarter, in 3 months.
Yeah, and I think their profit margins are in the 70 to 90% range. And the stock went down.
It's a weird market.
It's like, so that kind of tells you something. And then for some of us people that look at the macro, there are some very not good things that you don't want to see. Like, for example, today we had a very hot inflation print.
The PPI print was 0.8, supposed to be 0.3,
which would be a very high annualized rate, and could have to do with tariffs and people trying to stock items at the beginning of the year. But still, bond yields went down.
Yes.
That's not a good sign.
Unusual.
That would mean people are worried about growth and think there's going to be demand destruction more than they're worried about inflation.
Yeah.
And that would be a very different dynamic we've been in, because inflation can be good for asset classes. Inflation can be good for the stock market. Inflation is good for corporate earnings. And we've seen, obviously, a great run. If you have a true growth scare where, like, the economy is actually slowing it, and objectively, obviously the numbers will get revised, but regardless of what people say is going on in the economy, we went from a 2.8% economy 2 years ago to a 2.2% economy last year. So we are going down sequentially on the growth curve. So if we are slowing in growth and you're seeing we're not creating any jobs, I don't think there were any net jobs created last year after the revisions. We're about flat.
Yeah.
And then now you're seeing people like Block and other people lay off 40% of their workforce because of AI. Like, we're in a good place with the labor market right now because the unemployment rate's very low. But because we're not creating any jobs, I was seeing Claudia Sam speak earlier on it, and she's like one of the best labor economists. She's like, we're in a tenuous spot because if you start really seeing layoffs pick up and you're not creating any jobs, then the unemployment rate really starts to pick up pretty quickly, and then you really do see that demand destruction.
But I'm going to throw one thing out. I'm going to throw two things out there, Adam, if I could, and Josh, forgive me. One is you could look at the bond yield as a wager on whether or not there are further interest rate decreases throughout the year. I think Mirren is talking about needing 4 interest rate cuts. So I think I'm with you. The bond market's
reaction. If growth goes down, you need cuts. You would need a more accommodative Fed.
Right.
And I think we got a question from Sonia as to what does it have to do with BTC? I would say just to Ron's point, if BTC is operating more as like a macro asset, risk on speculative macro asset, it might struggle in a period where macro risk on trades are getting hurt. Right now, we're seeing a huge rotation in the market from the risk on trade, cyclical, like more substantive trades. So it can impact.
So I have a question, guys. So what I've been reading says that, well, obviously we've been seeing what's been happening with the Bitcoin price, but I've also been reading that the Bitcoin ETF flows have turned positive, that the inflows are increasing. Does this mean that the large players are selling and the individual people on the street are buying through the ETFs? Like, how do we interpret this?
Well, I think also we had a day after the State of the Union where everything went up, I think like 10 or 15%. So the flows for the week might look differently after the last couple of days if we have a significantly another bad day. But I think what we've seen consistently is retail's a buyer on the dip. And they have
retail's a buyer. And I think institutions are stuck with a rotation just based on institutional demand.
Well, but that's one of the macro factors. If you are an institutional asset, as institutional money managers have to bring risk appetite down, have to sell as they rotate. That's what happens is they sell
these are not done on a whim. Some of these are mandated.
But also some of these are programmatic. Like sometimes they have to sell to meet certain risk parameters if you are entering a contraction cycle. And as I was just pointing out to some things you don't want to see, I think we saw delinquencies are at their highest rate since 2017, and we saw the high yield bond spread blow out 300 basis points. That's not good. Like that's
but delinquencies on the credit cards you're talking about?
I think overall U.S. loan delinquencies is highest 2017. There's some factors you don't want to see.
I want to throw one thing out there because you said BTC and macro, and Adam, Josh, I'm with you both. And we've had this conversation in prior broadcasts. I think I'm going to go wonky, Josh. Please forgive me. BTC is correlated on a macro basis, but it has negative skew to the downside. And what that means in my mind, and I haven't run the data. I'll have coffee over the weekend and try to do it. But when macro trends move markets up, Bitcoin tends to try to parallel it, but it lags. When macro trends move the market down, Bitcoin was down faster, hence the negative skew. So I think that's important. We've got Sonia continuing, and David, what kind of Wi-Fi does he have on the plane? Sonia's GDP is high, but what about the loans on your stock in California? Is that a crash looming? I'm gonna, Adam and Josh have portfolio, exposure all over the globe. I'm going to leave that to the two of them. I think California is its own sort of ecosystem. Adam, you and I can have that conversation over cocktails one day. David Grill.
Here when it's growing, as far as I know, everyone's coming back to San Francisco and Silicon Valley. People said it was dead, but all the tech companies keep going back.
David also notes we should be mindful the last time the U.S. attacked Iran, BTC and crypto broadly went down 10 to 15%. Again, weaving in really important point, the kind of geopolitical challenges of assets like this. And let's hope it doesn't happen. I mean, there are challenges when those things do happen. But Adam, Josh, I'm going to go back to one last thing. We've got a few minutes. Adam, we've been talking about PPI. We've been talking about employment data, and I'm with you. And David and Josh and I have said, well, I've been saying it a lot, and David and Josh tell me if I'm wrong, but it's not the data, it's the revisions. And I feel like a 0.8 print on PPI versus a consensus of 0.3 just feels, a standard deviation away of where it should have been.
It could be, but also you have a distortive factor in the wholesale PPI, which is tariffs. It's like there may be a PPI we think we're supposed to have, and then there may be a PPI that you have when everyone rushes to buy their stuff at the beginning of the year because they think the tariffs are going to go away, and then the tariffs get put back on, and then they have to then readjust their supply chains. So it's I think it was Mirren, I think he said in his testimony, don't we think, I think according to the economists, again, if you believe the revisions, almost a half to a full point of the current inflation is just the tariffs.
Yeah.
So you might have a naturally falling inflation rate that's below the Fed target, but if you add a 0.5 or a point to it,
right,
it might be significantly above. So it's it will be revised significantly, I'm sure. It's just you do worry about that because.
So I'm going to open up another front on this argument. Josh, you've probably heard me and David say this before, and Adam, I'd love your perspectives. There is a not insubstantial school of thought that says the current inflation data that the government collects is inherently flawed in processes and procedures, and the current inflation rate is. And I'm thinking Trueflation. I don't have any economic interest in them. I don't see their data other than public media. But Trueflation, for example, says current inflation is actually significantly lower than what's reported by the government. What's your take on that?
Well, I think there's the way you measure inflation, and there's also the way people feel. Because even if because we're arguing over whether or not the true inflation is 3 or 2 or 2.8 or 1.8, the average American family has seen their costs go up 30 to 40% over the last 5 years. So whether or not it's now rising at a slower pace on top of that 40% jump with no drop is a very different thing to people, as to like how they feel about the inflation. And just the way I always look at it is I've always been a person that believes that there are economic forces at work. So if we're growing the money supply and the government's continuing to spend and print record deficits, you're going to have inflation on the other side. That's just the way it works. More money in circulation means the money is worth less, which means your buying power goes down, which is always just, I think, what the American people have been feeling is that their money that they earn is worth less and it buys less than it used to. And I don't think you could divorce that from the fact that we just keep spending record amounts of money. And
it's easy to talk about data, and we've all talked about this on previous broadcasts and a lot of our meetings. There's a human factor to this. So if gas and food prices are higher, people are impacted, and I don't mean to minimize that.
There's a wealth effect too. I mean, even just the depression in crypto prices, you feel a lot better if you were holding a lot of crypto positions and BTCs at 100 than you do at 65. It's similar with the stock market. It's like you feel great when it's at a record, but it's like if it has, and we're not having that big of a pullback right now. It's like 2, 3, 4%, but that weighs on psychology. Is people do spend more when they feel they have more money in their pocket.
Yep. Adam, Josh, thanks so much. David Wysocki, great point, great session. Kudos. Adam, David, thank you so much. I always just ask stupid questions, and Adam and Josh put me in my place. Adam, Josh, it's a busy week coming up. I guess my question to both of you is, I've not read the OCC NPRM yet. I've got a bottle of Sauvignon Blanc and a pot of coffee waiting for me over the weekend to give it a review. Josh, tell us about the upcoming days for you. And I've got some announcements. Obviously, we haven't talked about AI more deeply. Adam, I don't know if you're aware of this. Josh is a quantum expert as well. I'm learning that. But Josh,
we didn't get into the quantum.
We will have to get into
quantum. So you can use a whole webinar or session on that.
It's funny you say that. Josh, what do you got coming up this week?
So, well, I will be poring over which I have read, like skimmed, the OCC notice of proposed rulemaking. I'll be looking at that further. I will be hopefully making some headway on some projects, but I won't be traveling in the next week. The following week, though, I'll be in Boca for the FIA's
Josh
annual
Klayman
conference.
On stage, right?
Yeah, I'm really excited. It's going to be, I'm doing a panel, I'm moderating a panel on tokenization. So I've got, the key people from, DTCC, Schwab, Citi, Digital Asset, others about talking. I'm leaving someone off, but I can't think of exactly who it is right now. Talking about what they're doing with tokenization. So I'm super excited for that.
It's a conference. Funny enough, last time I was there, FTX was the main sponsor.
Oh,
wow.
Adam going for the Wayback Machine. The FIA conferences are great conferences. So Josh, enjoy. Send our regards to all our colleagues and friends there. Adam, it's not like you're not busy. What's coming up for you next week?
Well, I will be very interested to hear the readouts of how DeFi week went, and I think it would be great this week. There have been a lot of closed door conversations with very important people being shuttled in and out of the White House. There's been the White House crypto advisor Pat was on Crypto in America saying some hopeful things. As Josh notes, there's some important conferences coming up, which I imagine policymakers will be speaking at.
Yep.
It would be good to see some notes of progress over the next couple weeks, or even this week, like some updated draft legislative text, some news about compromises being reached, potentially scheduling announcements. So I will definitely be looking forward if we really do want to see progress on market structure in March. It would be great in the first week of March to see some of those baby steps to get there. So I will be intently looking at that.
Adam, go ahead.
May I just mention something? Adam, I'm so happy that you're on here with us. And I would just like to emphasize for the audience, like your title, you're product counsel, so you're a lawyer and you're focused on products, and yet you're also a policy guru. So when we talk about people like having a lot of knowledge about a lot of things, like I think we're so lucky to have you as our guest.
It was a privilege to have you, Adam. We'll have to have you back. You better have your cup when it arrives. I likewise have got a lot of work to do. I'll read the OCC thing. Josh, we've talked about it. We're planning our April trip to DC. And I am also going to be actively working to make sure that when David lands, see where the BTC price is. I might even live stream that. Adam, Josh, we're going to leave it there. Thank you so much. Adam, always a privilege. We have to have you back. For everyone who put in comments, thank you. Sonia and David and Larry and I missed someone else. If I did, I'm sorry. If you have additional questions for Adam or Josh or I, please send an email, info@wsba.co. Have a great weekend, everyone. We will be back next week. Take care.
Everyone.
Thank you. Bye.